This is the Friday, March 17th, 2017 version of the Market Plus segment. Joining us now is Dan Hueber. Dan, happy St. Patrick's Day.
Thanks very much. I'm glad to be here today.
Yeah, and you're looking festive with the green tie.
Well, very good. You know,
and green shirt.
I needed to be cautious, because this week, not only did I break a mirror, I walked under a ladder. And a black cat crossed my path. So I figured, I have to do something to kind of counteract that.
It's a long drive.
Absolutely.
Yeah.
Absolutely.
We're glad you're safe, glad you're here.
Right, very good. Very good.
Oh, all right. So we've got some great questions from our followers on Facebook and on Twitter. I just want to get right into them.
Very good.
Nathan up in Inwood, Iowa. He's a follower on Twitter at Neuendorp_N says, we know the bean supply situations. Big carry out, big crops in South America, big acreage coming in this country. The sky is falling. But what about demand? And you touched on it on the show this week. With carryout staying the same, where is demand fitting into this whole picture?
Even look at the recent export sales, and they've drifted a little bit lower on soybeans. Gosh, we're only selling 17 million a week or something like this. But I mean, already we have sold 95% of the projections for the year. We've got 24 weeks left, 25 weeks left in the year. So I really think we're already on a pace that we've probably understated the demand to begin with. And certainly that seems to be kind of the supportive factor that continues to hold the beans in there. Yes, the South American crop seems to become larger every time you turn around here, but we still have that 800-pound gorilla in the room, which is China, and they just seem to have an insatiable demand for the beans right now. We know their livestock numbers, particularly hogs, have been on the increase. Maybe some concern with the avian flu that's been popping up here and there, but here again, I mean, it's the growth numbers over there seem to be in hogs, and hogs need a lot of meal, and it seems to be the driving force right now.
How has the domestic crush been recently?
The crush for the last month did back off. I mean, it was down considerably from where we were in January. Not unusual. You're going to see it tend to drift off as the year moves on. Still has been strong numbers for the year as a whole. So inventories on the meal and oil certainly not burdensome. So it is again, I think that is a supportive factor. I mean, we continue to expect the demand to back up. And yes, it slowed down, but yet it had to. I mean, we were just running such phenomenal sales and exports week after week that it was inevitable. It had to slow down some, but it's still tremendous.
It is, and all things considered, given 108 million metric tons in Brazil, given 88 to 90 million acres of beans potentially in this country, Novi Beans closed the week at 993.5. I mean, that tells you that the market is anticipating strong demand.
Yeah, and there's no question about it. When you look at add all the things together as far as the acreage, the South American production, you just think things seem to be weighted against the soybean market, but it doesn't give it up. And I think part of the element now is, yes, we know there's a lot of ingredients in place that could conspire together to ultimately push bean prices lower, but we still have that major concern, which is what's the weather going to be like this summer? And until we get a better handle on that, it's going to be hard to take the soybean market dramatically apart.
All right. Our next question is from Tim in Crookston, Minnesota. He's on Twitter at the $6 wheat guy. Tim's the eternal optimist. Very good. He says his marketing plan, like his bracket, is busted already, Tim. Jeez.
Early in the year for that.
He says, can wheat bounce back? Will corn continue to roll? And as we already talked about, is South Americans' bean offense too much? So let's talk about wheat. Can it bounce back? And if it would, what are you looking at for levels for guys to really get aggressive on making some sales?
Well, realistically, the wheat market has never had a huge gain to the upside either. We've been really in a year-long or better basing pattern in here. Now, granted, unlike the soybeans, of course, we have these dramatically low acreage numbers in the U.S., already a little bit of weather concern, but not enough to really kind of push us over the edge. So, honestly, as we spoke on in the earlier section, I want to be friendly on wheat, and I'm certainly not negative, but we still like that spark. I tend to think it's going to be coming along as we move a little bit closer to spring and start building a little more weather in there. Can we push in July wheat back up into the $5 plus range? I don't think that's a big challenge, honestly.
Okay. So, all right. If we get north of $5, should producers really start to look at locking in some sales, or do you just, if we get to that, you let it run, see what
Granted, we don't have the crop insurance, kind of supports that would say you can be overly confident not doing something. But yeah, I think we're at the year, and again, this kind of comes back to my belief that I think the commodity sector as a whole is in this transitional stage. We're moving into more of an up, and I'm going to hesitate to say a bullish market just yet, but higher markets overall. So that does favor tending to use options, put options versus actual sales, or at least if you're making sales, always be ready with some kind of an instrument to give yourself protection to the upside in case one of those unforeseen elements does come about.
Some type of re-ownership strategy.
Correct.
Our next question is from Troy. He's in Montfort, Wisconsin, and Troy says there's been talk of the expansion in the cattle herd for the past 5 years, and the general consensus is we're going to feel that expansion in 2017. His question is, how should cow-calf operations be marketing their feeders? Because they do have the flexibility that the feedlot operators don't.
Sure.
How should they be tackling this upcoming year of, potentially downtrending feeder prices?
Here as well, I think they have a lot of positives that are kind of underlying them there. And one that we have tended to overlook over the last couple of years, which is a rebound in demand. And again, I think that's something that's been understated. And then if we, granted, I'm talking about what if possibilities here now, but we also have the second what if possibility. What if we really do see the dollar turn lower in earnest at this, looking into the months ahead here? You could see a little bit of a resurgence back into the export market, which would be very beneficial. All that said, I am a strong believer when it comes to risk management is, developing profit objectives. We have so many tools available to us today, not only with, future sales or cash market sales that can be locked in with operators, but using these various options, the short dated, and don't be afraid to use both sides of that option market. Yeah, there's no excuse not to lock in profitability, particularly after coming through such a difficult period as we just have. But same token, use and develop strategies that are going to leave that upside open. So
Gotcha. It's all about flexibility as you look at 2017.
Yeah, absolutely.
We're coming out of this, hopefully we're coming out of this downtrend. And in that transition period, you want to be flexible.
Well, and of course, never losing sight of the fact that yes, there's a lot of pain out there at this point in time, and I don't think we've really seen that shake out just yet. Again, this expands over to the crop side. If we do have any kind of an issue in production this year, I think you're going to see a lot of pain come to the surface very quickly. In the respect that over the last couple of years, low prices are dramatic, but we have compensated for them with phenomenal yields. Boy, you can never have a good enough price if the yield is not there.
Right.
So,
all right. Weather concerns, issues like that. Phil in Ontario, Canada wants to know, with December corn near 389 and the apparent switch worldwide to soybeans, when do we hit 4 1/4 corn in December?
Sure. And I think it's probably going to be a little bit more towards spring, maybe early summer. Honestly, that 425 to 450 range, really looks well within striking distance. And I don't think it would take much of a spoof anywhere production-wise. That could be the U.S., that could be Europe, could be Ukraine for that matter, as far as getting to some issues there. Over the last 2 years, the last 2.5 years, I guess you'd say, here we traded 450 December corn with 3 to 4 million more acres than we theoretically will have this year. So, yes, I think that 4 1/4 will come relatively easy once we start concentrating just a bit more on the weather here, and of course assuming that yes, we're going to lose 3 to 4 million acres of corn acreage.
And do you find that plausible as you look out and you're making your estimates? Do you think that 90 to 92 million corn acres is realistic?
Oh, I think so. I really think. Economically or statistically, it works out when you run economic models. The more people you talk with in the country, yes. Nobody's wholesale switching over to beans, but you got 2 or 3% here and 10% there, and yes, I don't think that's going to be difficult to see that number. Now, granted, last year, early on, we thought we were going to lose that on the corn acreage. Did not happen. Are we going to see an early spring? Well, the warm weather would kind of indicate that. Now, some people will say, well, if we get an early spring, they're going to get the corn acres anyway. Yeah, I think the economics are just a little bit different this year.
Now, last year, did we get the 94 million corn acre number from USDA on March 31st?
We did on the March, I thought it was around 93, but I think
93, right.
But
We ended up-
at the symposium earlier in the month, they actually came out with a lower corn acreage,
Right.
as they did here just a few weeks ago as well.
Yes.
So, yeah.
All right. So we've got these factors coming together. Phil in Ontario has another question that I think speaks to a lot of what we've kind of been dancing around here on the program. He says, will it take hot and dry this spring and summer to bring investment money back into the ag commodities? And that's where I want to focus your attention. Dow, record high. We're seeing the dollar have maybe a little bit of a break. When do we in agriculture, start to capture those investment dollars?
You know, at this point in time, most of the, and really for the last 13 months now, there has been money shifting back into the commodity sector as a whole. Now, granted, it's been more heavily weighted towards crude oil, gold to a certain extent, some of the other industrial metals, but on the periphery, that has put additional money into the commodity sector as well. I think the stage is already set, but here again, I think everybody knows it's a value, and you're going to get the value investors in there right now, but you're not really going to get the wholesale switch over until we have that incentive. And the incentive at this point, when you're on a supply-based market, the incentive always has to come with a weather issue.
Okay.
So we're not quite there yet. But
keep an eye on the forecasts.
Absolutely.
All right. Well, Dan Hueber, before we let you go, we like to get our analyst to answer a question, help us define terms frequently used in the commodity market. So I was going to ask you, could you define what it means to go short in a market? We talked about it on the program. What's that mean?
Certainly. Well, going short, of course, is always referring to selling. Now, granted, just selling something isn't necessarily going short. It is selling something you don't own, theoretically. Of course, that brings me back to a many years ago conversation with my grandfather when I first entered this business in the 1970s. He said, you know, Dan, what you do is wrong. I says, well, why is that, Grandpa? And he said, well, you can't sell something you don't own. And of course, you know, being the young buck I was, you know, no, Grandpa, this is how the markets work, and it gives us liquidity in the markets. And he just said, no, it's wrong. So I'm not going to argue with Grandpa, but and some people probably still feel that way. But I mean, it does provide that liquidity. I mean, that is really, a lot of people don't know you can short equity markets. You have to do it on an uptick, unlike commodities where you can sell it at any point in any time. But I mean, if you're selling something you do not own yet, that's going short.
Right. I've heard the futures market defined as selling things you don't own and buying things you don't want, which is an interesting definition.
Yeah. You maybe don't want to buy it when you don't want it,
right.
But that would be when you want to sell it when you no longer want it. But usually the market tells you don't want it anymore.
Yeah,
so,
yeah. Or your banker.
That's called a stop.
Yes. If you don't have a stop, it's called your banker.
A term for later. Yes.
Yes. Well, Dan Hueber, thanks so much for taking the time to join us.
Absolutely, my pleasure.
And as many of you may have noticed, it is fundraising time here on PBS. So if you find value in our program, do please consider making a pledge to invest in this program that provides you with the news and market analysis you have come to know and trust. And join us again next week when Mark Gold will sit across from me here at the Market to Market table, and we take a look at how one-stop shopping is connecting growers and buyers. So until then, thanks for watching or listening. I'm Mike Pearson. Have a great week.